Ever wondered why so many are struggling to secure a home in California, one of the wealthiest states in America? Let's take a moment to put this into perspective. The housing market in the Golden State, known for its sunny beaches and star-studded Hollywood, is in a state of crisis. It's not the lack of beautiful homes or apartments that's the problem. Rather, it's the skyrocketing housing prices that are putting a strain on the wallets of Californians. To illustrate, let's delve into some numbers. Over the past decade, the median price for a single-family home in California has more than doubled. This growth rate is significantly higher than the national average, making California one of the most expensive states to live in. But it's not just the cost of buying a home that's causing distress. Rental prices too have seen a steep increase. In many cities, the cost of renting a modest two-bedroom apartment is now well above the national average. What does this mean for the average Californian? Well, most residents are spending more than 30% of their income on housing. This is a significant deviation from the generally accepted benchmark for housing affordability. And with the cost of living continuing to rise, more and more Californians are finding themselves in a precarious financial situation. This crisis is not just about numbers on a spreadsheet. It's about families struggling to keep a roof over their heads. It's about young professionals unable to start their lives due to the burden of housing costs. It's about seniors who, after years of hard work, are finding it difficult to maintain their homes. The impact is far-reaching, affecting individuals from all walks of life. And though California is known for its wealth, the reality is that the riches are not evenly distributed. The widening gap between income and housing costs is leaving many behind, creating a state where only the affluent can afford a comfortable living. The numbers don't lie. The housing crisis in California is real, and it's hitting hard. Is owning a home becoming an unreachable dream for Californians? In the Golden State, the dream of home ownership feels more like a mirage for many. The statistical landscape paints a grim picture. Let's peel back the layers and delve into the numbers that form the backbone of this narrative. In the mid-20th century, over half of California's residents were proud homeowners. Fast forward to today, and this percentage has dwindled significantly. Now, only about a third of Californians can afford a median-priced home. That's right, just 1 in every 3 residents. But what's driving this decline in home ownership? The answer lies in the widening chasm between the median home price and the average income. The median home price in California has skyrocketed to over $700,000. Yes, you heard it right, $700,000. But here's the catch. The average income hasn't kept pace. In fact, it's lagging far behind, sitting at a little over $60,000 per year. So what does this mean in practical terms? Well, to afford a median-priced home, a Californian would need to earn 3 times their average income. This stark disparity has pushed homeownership out of reach for a vast majority of residents. This isn't just about owning a piece of land or a roof over one's head. It's about stability, community, and the opportunity to build wealth over time. It's about fulfilling the promise of the American dream. But for many Californians, this promise feels more like an empty pledge. The dream of homeownership has been eclipsed by the harsh reality of unaffordability. The financial strain of sky-high home prices is causing a ripple effect, impacting not just individual families, but entire communities and the state's economy. Home ownership, once a symbol of the American dream, is now a luxury few Californians can afford. The question remains, how long can this trend continue before the bubble bursts? And more importantly, what will be the fallout when it does? What happens when even renting a roof over your head becomes a financial burden? This is a question that many California residents grapple with daily. In the Golden State, the cost of renting is not just high, it's astronomical. Data reveals that California is home to some of the most exorbitant rents in the country. This isn't just a problem for those living in glitzy neighborhoods of Los Angeles or the tech hubs of Silicon Valley. It's a statewide issue. From the sun-soaked beaches of San Diego to the vineyards of Napa Valley, the cost of renting is soaring. Now you might be wondering, what exactly does it mean to be rent-burdened? Well, if you're spending more than 30% of your income on rent, you're considered rent-burdened. And in California, this is far from a rare occurrence. In fact, it's becoming somewhat of a norm. Imagine this, you're working a full-time job, maybe even a side gig or two, and yet over a third of your earnings go towards rent each month. That doesn't leave much for groceries, utilities, healthcare, let alone saving for a rainy day. This is the harsh reality for a staggering number of California residents who find themselves caught in a relentless cycle of working just to afford a place to live. The repercussions of this rent burden extend far beyond individual households. They ripple out into the wider community, affecting everything from local businesses to public services. When people are spending such a substantial portion of their income on rent, they have less to spend elsewhere, leading to a slowdown in local economies. Moreover, the high cost of renting can act as a barrier to attracting new talent. After all, who would want to move to a place where a significant chunk of their paycheck would evaporate on rent? This could potentially stifle innovation and economic growth in the long run. The cost of simply keeping a roof over one's head is proving to be a struggle for many California residents. As we venture further into the 21st century, the question remains, how sustainable is this situation? And more importantly, what can be done to alleviate this growing rent burden? What does the future hold for California residents caught in the grip of this housing crisis? As we peer into the crystal ball, the outlook appears rather ominous. If housing prices continue to soar at the current rate, we could see a mass exodus of residents in search of more affordable living conditions. This mass migration could have a ripple effect on the state's economy. As people leave, businesses may suffer from a reduced consumer base, potentially leading to job losses and an economic slowdown. Additionally, the state's tax revenue could take a hit, impacting the funding of essential public services. Moreover, the disparity between the rich and the poor could widen, leading to increased social tension. The Golden State might lose its shine, morphing into a playground for the wealthy, while the average Californian struggles to keep a roof over their head. Without significant intervention, the consequences of the California housing crisis could be dire.